Hey guys, in this video we're going to take a look at ECYT. If we take a look here at Market Watch, we can see that early, right before the bell, there was press release. They announced pricing of public offering of common stock. So those were good enough news to make it run like it did today, as you can see here on the chart. Really nice move, actually. But let's take a look at the levels. Let's just zoom in here real quick. So we can see that. So at the open, it opened at 465. The low of the first candle was 451, and the high of the last breakout candle, which closed red, by the way, was 517. So we're looking at a range of what, 66, 67 cents, which is a really nice range. But something that I haven't really gotten a hold of yet, haven't cracked the code on this, is stocks that have breakouts of more than 1 to 2 candles. So, when they have three or four or more, um, you know, I'm a little cautious when it pulls back because you would think that it's been running higher and higher with all these consecutive green candles, that you would think that a big pullback is due, right? And what I've noticed is that that doesn't always happen, or at least not most of the times. What happens most of the times is that they do have a pullback, and sometimes you have a lot of pullback candles, but typically they don't cross over 50% of the breakout, so they don't really pull back as much. But that's just something that I've noticed. It's not canon or anything, so don't go by my observations. Just a comment of what I've seen lately. But anyway, let's take a look at these levels. So the high of the breakout was 517, and the low of the pullback was 495. So that's a range of 23 cents, or roughly about 34% of the breakout move. Then on this next candle, you have the breakout. So let's take a look here. So this is the breakout point, the apex point. Sorry, not the apex, but the breakout point where it's supposed to run, the high of the last candle. And that level was 515, and we can see that it indeed ran all the way up to 533. So that's a nice little move. That's a 18-cent move. Then it pulls back again, only one candle, back to 515. From what did we say it was, 533? So another 18-cent pullback, the same amount as a breakout, and then it runs again, but this time three consecutive green candles all the way up to 572. And now that's 30, 60, 42, 44 cent move on the breakout, on the third breakout. So I didn't trade this stock just because of the amount of green candles on the breakouts. I like to trade 1 to 2 candles, or I'll trade more if it's a huge move, and I'm absolutely sure that there's going to be a significant pullback. But this one I didn't, because you just have this you know relatively smaller candles on the pullback, and then you just have so much momentum. I kept thinking it's too extended already, so I ended up not trading it. Uh, but there was definitely some money to be made on this stock, and let's just keep in mind the context, right? The situation here. This is a stock that is going to have another public offering. So maybe we just can keep that in mind in the future. That doesn't mean that other stocks with secondary offerings are going to behave the same way, but it's just good to know, good to keep in mind. I definitely wrote it down on my notes. And from here on out, I mean, I guess it just it dipped a little bit, but it was just really curling up until it reached the high of 572, and then it broke again. Of course, this happened in the PM, 608. from 572 apex point. So that's a nice what is 28.36 cent move. So you know it's not a stock pattern that I am very familiar with yet, but it's good to know. So that's it, guys, for ECYT. If you have any questions, comments, suggestions, please let me know, and we'll see you on the next one. Have a good one, guys.